Gary is on the website. He's from Florida, and he's asking, can stocks compete with CD rates in the Bidenomics world? Good question, Gary.
Well, hopefully the Bidenomic world will be short term.
Well, amen to that.
Now, if that's the case, in the short term, CD rates could outperform stocks, especially. I think it's going to take a little bit longer for Bidenomics to work its way through the economy. It's going to take more of a sustained track to be able to really derail equities. So in an inflationary environment like we've seen, stocks are really the antidote to inflation. And if we look long term, equities have always outperformed fixed income in the long term. So although short term, we may see a little bit of opportunity, and if you're a partner and you look at the asset allocation models, you'll notice that we're trying to take advantage of that a little bit. Seeing 5% in short-term CDs is something that we haven't seen in more than a decade. So we've taken advantage of that a little bit. You have to still keep in mind the real rate of return. So even if you're getting 5% in a CD, inflation and taxes have to be less than 5% for you to actually get ahead. Now, for some people who may just have a preservation mentality, maybe they are advanced in age, maybe they're approaching their 80s or they're in their mid 70s, and their focus, their financial goal is really to just preserve more of what they have, get a little bit of income off of it and preserve, then, that's an okay strategy. But if you're younger than that, especially if you haven't saved enough money to get you to where you need to be, then you really need to be focused on having some exposure to equities in your portfolio.